Hello, good morning, dear students. My name is Luv Support. So, I'm here to explain financial management CA Inter question paper, the analysis with respect to June 2023. Dear students, CA, CMA, such a professional institutions, when they design a question paper means, so they never make a question paper hard, tough, but they want to judge the student toughness or subject caliber. So, with this question, in this question paper, right, I'm going to discuss with you in detail how the each and every question they're framing and what are the areas they've been collecting, and if this question paper is this way, then what might be the question paper what we going to get it in future. So keeping all these things we are going to discuss, just it is an analysis. Okay, right, coming to the first question, here it is. This is the first question, dear students. This is section 1. They asked, you know that in CME, you have 1 mark questions, MCQs, fill in the blanks, true or false. Okay, all these questions. So here the MCQs they covered. The first question, this question they asked from, right, you observe it. This question, the capital structure of the company, 40% equity they want to raise, and 40% preference they want to raise, and 20% debt. Okay, clear now? So 3 sources they want to raise it. One is equity, another one is a preference, another one is a debt. Okay, but here after tax cost of preference, the cost of equity here, debt is given 18%, 9% preference is 18%, 9% respectively preference. Weighted average cost of capital 9% is given, and current dividend price 13 rupees and 13 rupees, market price is 112, and find the growth rate. This is the logic. They asked, this is the question. So finally they asked, how do you find it out, a growth rate? This is the problem. You try to understand. How do you find it the growth rate? Growth rate, you want to find it out KE. Growth rate is available in KE, right? So KE equal to DPS1 divided by, in first problem, okay, here it is. So how do you find it out, growth rate? Growth rate, if you want to find it out, so what you have to do, you have to find it out first. First, what you have to find it out, KE. KE equal to DPS1 divided by market price plus growth rate. So this is the KE. So from this KE you have to find it out. But what is the problem they given? Weighted average cost of capital is given, KD is given, KP is given, right? When KE is given, what you might have done? So by considering all this source and the proportionate of amount, right, its weightage, you might calculate the weighted average cost. So generally we used to calculate step number 1, specific cost. Step number 2, we used to calculate weighted average cost. But here weighted average cost is given. So you have to go with the back. So you have to go with the down to top model, means by basing on what the logic here it is in, basing on weighted average cost of capital with support of cost of preference, with support of cost of debt, you must to find it out cost of equity. Once you have a cost of equity with the support of this given equation, you can find the growth rate. But for 1 mark, so it is a little bit lengthy, but the thing is, what happened, you have to concentrate and you have to calculate, no other alternative. So instead of asking it directly growth rate, right, he gave problem in such a way. Keep it in mind. The next one is, in this growth rate for this problem, answer is 9%. The growth rate of the company is 9%, right? Next question number 2, right? This question is asked in from cost of capital. From the chapter called cost of capital. What will be the question number 2, dear students, here? What will be the present value of perpetuity? 10,000 payable at the beginning of the year. The growth rate is 5%, growing at a 5%. Rate of interest is 10%. Now try to understand, how do you calculate present value of perpetuity? So present value of growing perpetuity you can calculate cash flows divided by rate minus growth rate, right? So this is the present value of perpetuity. But here the cash flows assumed to be happens at the end of the year. End of the year, end of the year, end of the year. But here beginning is given. In such a case, what the logic you have to find it out means, first year beginning you have to take directly. and remaining second year onwards means third year, second year beginning actually. Second year beginning is nothing but first year ending. So rest of the cash inflow you bring into present with a rate, and you added the initial cash outflow, initial payment, that is nothing but first year. First year you are making a beginning because already it is in present only, right? So that is the point to be considered. And this question they asked from time value of money. Time value of money, right? So first question they asked from which area? This is a cost of capital, whereas second one they asked from time value of money. Third one, compute the beta concept, right? Beta is asked, beta security from the given information, standard deviation market portfolio regression, right? So if you consider beta is nothing but indirectly you will ask a risk concept, right? Risk concept, whereas beta means it will comes to CAPM approach also, it would be reflects. But here exactly risk concept he identified. So it may reflect a beta estimation. Beta estimation they have given. So exactly there is no specific procedure in this new study material also to computation of beta, because in the entire material they given beta is given, we used to calculate the KE, basing on that we used to identify the risk, because you know beta is also called what risk? Beta, this is a question nothing but beta is a systematic risk or non-diversifiable risk. Non-diversible risk. Generally, beta is greater than 1, it's nothing but high risk. Beta is less than 1, that is nothing but low risky. Whereas beta equal to 1, it is nothing but normal. Okay, this is the concept generally they used to give, but here they just changed the procedure and they asked a beta estimation, right? So on this question you may consider at CAPM approach, even the CAPM approach reflects risk only. In risk chapter also we can discuss this one, and the answer for this one here it is for third question, right? The third question is 1.25. 1.25. Next, here the question is the during the book building process, the floor price is 150 and the cap price is maximum should be. This is nothing but financial instruments. It will come, dear students. Instruments, financial instruments, financial instruments. When you want to capital, you will issue, means you may consider market capitalization, means capital market, money market. Particularly this concept comes under the category of capital market. Capital market. When capital market, when a security you are going to issue, generally you will fix what is the two prices. One is floor price, another one is a cap price. The floor price, what is the price is there, the cap price should not exceed the 20% on that. It means that, so 150 is there, 150 into 20% maximum. 150 if you add to this one means 150 plus 30, the answer would be 180. Okay. So 180 would be the maximum price. Beyond that, it should not be exceeded, because floor price on floor price maximum the change would be 20% only, right? That is a financial instrument. Next, this is the quarterly demanded, the units produced obtained from the raw material, opening stock, closing stock of material. This is given from inventory management. Inventory management question. Inventory management means you can get it in working capital chapter, because working capital chapter we used to discuss in a costing also we used to cover. So this is the general question, but very lengthy one. You try to understand for the given marks. This much of question is very lengthy, but if you observe the solution pattern what we discussed previously, so this would be answer would be fifth one. The answer is 227 days. It is here. Here it is the answer, 15 days. Answer is 15 days. The next question, funds required for 10 lakhs and arranged the issue of equity 10 rupees each and issued 20 rupees 60% in a 10% debenture, 15% preference share, tax rate is 15%. Then what would be the cost of equity or return on equity? Return on equity, not cost of equity. Return on equity, return on investment. Dear students, return on investment equal to earning availability to equity shareholder divided by market value of equity, you can get it. Whereas return on investment equal to EBIT divided by capital employed. So these are the calculations. From the given estimations, you have to find it out. Earning availability equity shareholders divided by market value of equity. You can find it out. Return on equity. The return on equity, this problem might be taken if you consider from which chapter this question is considered, means return on equity we used to study in two aspects. One is the leverage analysis, also this concept covers, and another one is a ratio analysis, also this concept covers. Ratio analysis, leverage analysis. For the two chapters, this is not such a biggest topic because from the analysis point of view it covers, right? Return on investment, return on equity. So return on equity shareholder is exclusively belongs to equity. Return on investment means the total capital you raise from the various sources. That capital, if you invest, whatever the return used to generate is called return on investment. Okay, next question they asked from here. So PJ Limited purchased machinery on 20,000 and payable as 25% check and 50% balance issue, 14% preference shares, 500 rupees each, 500 at a premium of 20 per share. The remaining issue 12% debenture, 500 each at a premium of 4. Unpaid interest. Okay, calculate cash flow. This is nothing but 1 mark simple question. The calculation of cash flows from the financing activities for the cash flow statement as per accounting standard 3. So simply this question is asked from cash flow statement. This question is asked from cash flow statement. The answer for the question is 93,000. This is the answer, 93,000. Okay, coming to here, the return on equity point we should consider 46.85%. Next, RBI offers 91 days of bill. The treasury bill ex market bid is 98.93. Calculate yield on the such a bid. When bid price is issuing, so the benefit what used to get it is yield. So here the answer would be 1.07%. So this is the RBI issue, means if issues the bill means short term, it comes under the category theory part is money market instruments. What is that? Money market instruments. So from the money market instruments, it would be the general question with respect to theory part, right? From the theory part, they designed a question. Okay, they designed a question from the theory part. Okay, right. Coming to the next one is from the given information, calculate Atmos jet score. It is Atmos jet scores is the ratio analysis area. So from the ratio analysis point, current assets, current liability, EBIT, sales, retained earning, asset turnover ratio, debt equity, market value analysis. So everything comes under this category is Atmos score. This is the ratio analysis. But you try to understand ratio analysis, such a lengthy question they asked for 1 mark. Okay, try to understand, this is the very lengthy question, right? Next one, interest from fixed deposit bank is shown as interest from fixed deposit. Any company, if they makes investment in any banks, they used to get the investment return. So this question from, you may also consider the cash flows from cash flow statement, because cash flow statement. So this question from cash flow from investment activities. Okay, here the score cash flow from activities, here 4.25. Here this answer is 4.125. Okay. Next to probability density function describes probability density. Probability, it's nothing but risk chapter. So from the risk chapter based, they asked this question. So random, so probability density function, characteristics of random concept, non-random, non-random variable, random variable. If you considered all these things, it will comes under random variable, right? Random variable is nothing but a D. Next, this is also risk chapter. They asked, dear students, this question. And scatter plot displays several unique data points. See, scattered plots, it's nothing but the scattered two different types of points to be considered and added and made an analysis, and to come to conclusion. Generally we use the scattered plots. So this would be used to identify how many data to be points should be needed, meet 2 points. So this is the 2 points should be considered, right? And with this, you try to understand the 12 questions they asked. Among this, there are certain calculations which is a very lengthy calculation, but just they asked for 1 mark. Okay, right? So that's why what we have to come to conclusion that, don't come to conclusion that the lengthy problem would be given for high weightage. No, not like that. Even for 1 mark also they are giving. So what we have to do means we have to improve our calculation efficiency. That's the most important point, right? Coming to the true or false, they are given 12 marks, here 7. True or false means accrual principle is not following in capital budgeting. Absolutely right. Okay, absolutely right. Accrual principle, it's nothing but not a accrual concept. It is a financial management, is a guesswork. So that's why the point is true. Next, both IRR NPV 0, but IRR NPV can negative. It is a false statement, right? I know it is first one true. Yes, absolutely true. Second one is false. Coming to, because when IRR is greater than cost of capital, IRR is greater than cost of capital, NPV should be 0. What the question they are asking? Both IRR and NPV can be 0. How it would be 0? No, highly. The question construction is wrong actually. Next, Miller and model, transaction cost, holding cost, and annual cash requirement when it is cash flows are certain. See, Boomel theory projects that future annual cash requirement is well known in advance. Means there is no uncertainty. Certain. That is a Boomel theory. Miller theory means cash inflows never be certain. That's the reason we used to find it out the levels. That's why this statement is true. Next, EPS 0 at indifference point and financial break-even point. EPS 0 at indifference point. No, indifference point, it indicates it's a level of EBIT at which EPS remain same. At the financial break-even point, it must be 0. That's why it is a false. Next, internal growth rate in the maximum rate which the firm can grow without external financing. Absolutely. Internal growth means you are not at all depending upon external source. This statement is true. So the first one they asked from capital budgeting. So capital budgeting, actually such a lengthy chapter. So far they asked for 1 mark. So capital budgeting, they asked capital budgeting, right? Capital budgeting. This is also, these 2 questions they asked from capital budgeting. Baumol theory, this is nothing but working capital management chapter. EPS is 0. This is also capital budgeting. No, it is capital structure, not capital budgeting. It is called capital structure. Capital structure chapter they asked. So capital structure, generally we think this chapter would be good for the problematic point. Whereas capital budgeting, the 2 questions, whereas working capital management, they asked for 1 mark so far. Okay, working capital management, capital structure. Any data expressed as a number is called numerical data. This is nothing but analysis 1. Either you may discuss in a risk return or comparative common size statement also, it would be. But the data is nothing but we can identify the risk chapter. Next, structured data consists of tabulator information that may be readily reported. Any data expressed as numerical data, that is nothing but true only. And structured data consists the tabular information that may be readily imported in database and utilized any software application. This is true, I think so. Exactly true. So this is also true. So these are the questions. From these questions, data they asked means that is nothing but risk analysis chapter. Where any data, here the risk analysis chapter only they asked. Okay. So with this, if you observe capital budgeting, 2 questions they asked, working capital management 1, capital structure is 1, a risk chapter, data analysis, that maybe comes under risk return. Okay, then coming to fill in the blanks. So assume that the company acid test ratio 2:1, purchase treasury bill, one thing, acid test ratio. See, this is the answers we cannot discuss within the given time period, but this question they asked from ratio analysis. So from the ratio analysis, they asked the acid test ratio question. Okay, then schedule classify receivable accounts aging schedule. That is nothing but schedule classifies receivable according to age. It is called from working capital management. This question is asked. Aging schedule. Why we prepare aging schedule? Aging schedule, we will classify the receivables as per the time element. Basing on that, right, we will identify that how much amount getting blocked over the period, right? We will find it out the age. Basing on the time period, we will adapt what type of collection policies should be implemented. Suppose, dear students, your amount getting blocked 6,000 rupees, 6 crores is a blocked, is a receivables. So A company 6 crores, B company 2 crores. What is your opinion? Oh, A company might be the risk because 6 crores receivable is there. But whereas the 6 crores they provided, 6 crores they farmed by making credit sales just within the 2 weeks. Whereas 2 crores is being happened past 10 months means the 2 crores is a dangerous situation. So that's why receivables, when you put it on a schedule, a table form, considering the time element, by observing that we can come to conclusion that so which element, which time period, from which time period onwards the receivables getting blocked. So basing on that, we can take a wonderful collection procedures and management of receivables. So this question from working capital management chapter, D students. All the permanent working capital finance from long-term sources under working capital approach. Here also again they asked working capital. Theory part maximum asked. See, this is comes under working capital financing approach, matching approach, conservative approach, moderate approach. So matching approach rises funds from matching approach, conservative. Matching approach, so the minimum amount of working capital amount should be raised from the minimum amount of any month would be permanent working capital for all the months, that should be raised from long-term sources. Excess of the permanent working capital should be declared as temporary working capital, that should be raised from short-term sources. So this would be matching approach. So this question is asked from working capital, right here. And the cash flow statement is listed present to this one, cash flow statement 1. Here the answers you have, right? 1:1 aging schedule, conservative approach, and it is an indirect method, permanent working capital, and 5th one is indirect method. These are the answers you have, but this question is asked from cash flow statement. Cash flow statement. Here answer for acid test ratio. Once again, I've forgotten to write the answers. This is the 1.3:1, 1.3:1. For the second one is, the question is schedule classify, aging schedule, aging schedule. For third one, permanent is a conservative approach, and here it is nothing but indirect method, cash flows indirect method. So you try to understand risk chapter, working capital management, cash flow statement, ratio analysis they asked. Okay. Coming to here, dash is a collaborative funding model that collects a small contribution from the many individual. See, from many individual you are collecting small amount is nothing but what funding? Crowd funding. What funding? Crowd funding in United States of America. So this would be one of the leading way to generate the funding, crowd funding. Check it here, the crowd funding, right? Then data dash, a technique is utilized to develop a description and hypothetication as a specific data. It is nothing but data analysis. Data analysis, it is a basic question. So this question also from risk chapter. Okay, major risk chapter covered. Crowd funding is nothing but types of finance, whereas this question is asked from cash flow statement and working capital management, 2 questions, ratio analysis they asked. Okay, with this, true or fill in the blanks is gets completed. And let's move to another question, that is a essay oriented questions they asked, theory part particularly. The question number B is, what is question, this question is asked 2A, what is wealth maximization objective of the financial management? Why profit maximization is not operationally feasible criteria? State briefly interrelationship between investment and financing and dividendation. Dear students, this question is absolutely covered in our mastermind material, right? So successfully you can get the 5 marks. Coverage in MTP it covered, right? Covered in our mastermind material. So present, also present in our guest question paper, and ICMA material also is there. So financial management is a subject of decision making actually. All the decisions should concentrate to generate the achieve two objectives. One is profit maximization objective, another one is wealth maximization objective. Profit maximization objective is the objective. It indicates that all the decisions functions of financial management should take concentration to generate only profit. That means either to reduce the cost or increase the sales or make any strategy, but the profit should be ignored. Profit should be increased. But profit maximization objective is the best objective, but not an ultimate objective. Because any company, if it runs with the profit maximization objective, these students, what will happen? He always concentrate in order to maximize his profit. He can do some illegal tax activities or unethical practices in business. He might certainly do, because profit maximization is objective is a short run objective. It's not a long run objective. So in profit means it oddly considers within a 1 year, within a short span, right? Wealth maximization objective concentrates in a long run. That's why when you want to stay in the market in long run, then automatically your way of work style and at the same time production, supply, market relationship, and following government rules and regulations, everything you maintain in a fantastic way. But in a short run means it's not. So here profit maximization objective is a primary objective but not maximum. It measures efficiency. It is a limited objective. It's not a sufficient objective. Wealth maximization is a wonderful, great, because it considers time, it considers government rules and regulations, it considers long run business aspect. So that is the theory question. This question they directly asked from scope and objective of financial management, or you can say introduction to financial management. Very happy in 1 mark, 2 marks question. Some questions are lengthy they given. You can score 5 marks here comfortably. Right. Another question from 2B they asked here. Institution and instrumental financial market they asked. So the question is this: list any alternative investment funds, AIF, alternative investment funds, for credit rating agencies. List any 6 money market instrument traded in. List any 4 future treasury bills, and how yield on treasury bills should be calculated. So this is the all the points. He asked investments, he asked list 6 money market instruments and 4 future treasury bills, and the yield on treasury bill should be calculated, right? It is a direct question from the study material. Student read material, they can comfortably answer. Why? Because this question is available in our mastermind material in money market, and even when we gave a guest question paper also it covered. Okay, let us come to here the answer part. We will see. Here meaning for various alternative investment funds would be: number 1, angel funds is there, investment in angel funds, and money market instruments. Money market instruments, they are given futures of money market instruments. These are the several instruments they are given, and large participants. So treasury bill characteristics. It is a theory part, right? But no need to write this much of answer, because answer is limited for the given marks is 10 marks they asked, right? So each and every segment you have to concentrate. Basing on that you have to write the answer, right? So this is everything comes from the chapter called, what is it? Institution and instrumental financial market. Okay, right. Then these are the 2 questions, theory questions, 5 plus 10, 15 marks theory covered. Okay, coming to 3A, they asked again ratio analysis. This is nothing but problematic. See, dear students, ratio analysis. In order to take analysis, you must have intelligence. Whether the company is perfectly performing or not, right? You will make different types of analysis. Funds flow analysis, cash flow analysis, comparative statement analysis, common size statement analysis, trend analysis. Among one of the concept is nothing but ratio analysis. In the ratio analysis, generally their approach would be like this. They will give you ratios, they will ask balance sheet. Sometimes they will give you some income statement, they will ask you ratios, and sometimes they will ask you the ratios and they will expect that and what would be the company liquidity position, activity position, because all the ratios in the financial management with respect to company comes under the 4 categories. CLAP. One is capital structure ratio, L means liquidity ratio, A means activity ratio, P means profitability ratio. Once you understand all these things, this 4 only needed with respect to company. Once you are clear with respect to this, then automatically you can take a decision, right? So ratios won't give you the ultimate information. Ratios gives some financial data. While comparing two numerical data, right, we will bring some conclusion. That conclusion should be compared with a standard. Basing on the standard, you have to take a decision, right? So ratios here, what they asked in this ratio: debt equity ratio, net profit, operating profit ratio, inventory, tax rate, land and building and everything provision, credit sales, right? Calculate interest coverage ratio. Interest coverage ratio, it is nothing but the activity ratio. How effectively, okay, you can consider it is a long term, means you whatever the fixed financial commitment is there, can you able to handle what is that interest coverage ratio? Trade receivable turnover ratio, return on investment. Return on investment means EBIT divided by capital employed. Interest coverage ratio is nothing but which profit, interest, how many times the company is making EBIT so that we can pay interest. This is the very simple questions. This question is asked from ratio analysis, right? This question given by combining the above question after making modification amount and percentage, right? Coming to the next question, whether this question is covered in our MM material or not. If you observe it, yes, this question is covered in our MM material. The present in ICMA material also it is there, but luckily, not luckily, bad luck, we couldn't given such a question in guest question papers. You know, Mastermind has a such a means honorable commitment to say that we never say that if this question is be given in a guest question paper. Nothing. When it is covered, not covered. Bus itna hi hai. Okay, we couldn't give it. So that is the ratio analysis they asked. Another one is the next question they asked from funds flow statement. This is not funds flow statement, cash flow statement calculation. It's a very lengthy calculation. So what you have to find it out, various adjustments they are given, 1, 2, 3, 4, 5 adjustments they are given. Basing on these adjustments, we have to prepare a funds flow statement for this concerned problem. Okay, directly given in this problem. Similar model is covered in our mastermind material, that is a CRD 6A and the 7B part. By merging this, they designed this question paper. Okay, because funds flow analysis, working capital management, cash flow analysis, these generally includes huge calculations. So unless until you don't have calculation ability, you cannot handle the problem within the given time period. Okay, that's, and the presence in ICMA study material also this given, right? And the next concept, the question they asked from, this is the question, from the cost of capital they asked. Yeah, you see the cost of capital in financing decision, you have a 3 important aspects. 3 importance. Well, dear students, the next question, that is nothing but question number 4A, 6 marks they asked. In 4A they asked 6 marks. This question is asked from cost of capital. So cost of capital is the minimum rate of return that a company must earn to keep the expectations of investor. You may also say cost of capital is minimum rate of return that a company has to pay. So in this problem, if you want to compute what is that, they asked overall weighted average cost of capital. Overall weighted average cost of capital. Here Kalu Limited requires additional finance of 20 lakhs meeting its investment plans. The company has 4 lakhs in the form of retained earnings, investment and target debt equity ratio 25.75. Cost of debt is 10% before tax for the first 2 lakhs and 13% before tax. Beyond that, and the earning per share is 12%, payout ratio is 50%, PE ratio is a 5. Company wants to offer issue of equity share at the premium of 20 of the market price. The flotation cost is expected to be 6%. Company tax rate is 30% and the shareholders personal tax rate is 20%. Calculate overall cost of capital. So frankly speaking, this question is merged with the capital structure based problem he has taken and he modified with respect to cost of capital, dear students. Similar problem also there in our material with respect to capital structure oriented. Company wants to rise, but here what the elements they identified. As a debt amount increases, coupon rate increases. Why debt amount increases, coupon rate increases? Indirectly, what is that? Risk element of equity shareholders increases. That is a point. And PE ratio is a given. As a debt increases, certainly there would be effect on PE ratio. PE ratio formula, market price divided by EPS. It shows the relationship between EPS and market price, right? And here debt equity ratio 25.7. Earning per share also given. So while considering each and every specific cost, you have to calculate weighted average cost. Here we see the cost of capital, the concept here. The cash flow statement, the pattern of rising finance we have taken, and the debt to 25%, equity 75%, and the calculation of specific cost we estimated, cost of debt we calculated, and the cost of debt to coupon rate interest changes. This model is covered in capital structure. Next, cost of equity, where KE, cost of equity generally EPS divided by market price, but here PE ratio is a given. Reciprocal of PE ratio is nothing but KE. So similar this model question we covered in dividendation actually. From the dividendation PE ratio KE is given. From that point they considered and they brought it here and they asked in this question, right? Wonderful way. They asked the cost of equity and cost of retained earnings. This is already covered in our masterminds. Sometimes KE equal to KR when there is no flotation cost, but sometimes KE equal to KE equal to KR because retained earnings are funds belongs to whom? Equity shareholders. But in the second model they asked this question. So where KR equal to investor expected rate into 1 minus brokerage into 1 minus personal tax. So that point he asked, we calculated cost of retained earnings. Once cost of equity, cost of retained earnings and cost of debt is given means automatically you can calculate proportionate method or product method. So KE, you can also find it out like this weightage. KE into equity share capital divided by total capital employed plus KR into retained earnings divided by total capital employed plus KD into debt divided by total capital employed. You will get the weighted average cost of capital. Similar model problem covered in our material, but exclusively from some element from capital structure, one element from dividendation. He brought the both and he designed this question. Okay, so that's why one more observation we can say, don't expect a straight question from the examiner. That point we have to consider by making analysis here. Okay, so coming to this question, where these questions are covered, right? This is there in our mastermind material and in guest question also we asked and present in material, right? Coming to second one, the cost of capital, next one 4B. This is a 2 marks question they asked. Coefficients of variance portfolio, market portfolio is a given, variance of security, cost of equity, average market portfolio, calculate risk-free rate of return on government security. Cost of equity means you try to understand this comes under the CAPM approach model. CAPM approach. So CAPM approach only they will consider risk-free rate, risk premium beta, right? Risk premium, risk-free rate beta. Basing on this need some huge mathematical calculation with respect to variance and statistical techniques. You must know that statistical techniques, then only you can calculate. But this question exclusively asked from cost of capital. Okay, cost of capital, one is they aggregate asked weighted average cost. Second part they asked only specific cost. Okay, So this question is also available in our mastermind material. CRD 13 they directly given here. CRD 13B 60% or not, we can say that 100%, right? The same question also covered in our material, but not in this way. But whereas the same question covered in ICMA material, but honorably we accept such a model question paper we couldn't give in covered in guest question papers, right? But cost of capital exclusively asked for 10 marks. Then dear students, so this is the observations, you can identify it. Now from the past observations, it would be given that major in this problem chapter, you see the cost of capital exclusively are the some findings here in this chapter. The findings is some huge calculation also they are asking. So problem is lengthy problem they are giving, right? Lengthy problem, but they are asking for 1 mark question also. For this purpose, you have to improve your calculation. Second one, theory points, whatever they covered in the problem, they are converting theory into problem. And this point also you have to keep it in mind. Okay, theory part also they are asking. And there are certain chapters we generally fix that these problems are problematic areas, problematic chapters where working capital management, capital budgeting, yes or no, leverage analysis, so dividend decision, these are the problematic. But we comes to conclusion that only these are the problematic, they will ask only from problem. No, from this problem, from this question paper after making analysis, from this, even though the questions chapters are problematic, they may ask theory also. That is one of the proof of evidence, right? But proof of evidence. And another one is don't expect direct questions. So they are not at all asking direct question. Direct questions are not. Direct questions are not asking. So these are the some observations. And at the same time, if you observe the pattern of question, how many chapters you have? Time value money is there, okay? From time value of money, capital budgeting, capital structure, leverage analysis, dividend decision, risk return chapter, comparative statement, common size statement, ratio analysis, funds flow analysis, these many chapters are there. But you know, this attempt they have concentrated only few chapters in enormous way. One is a capital structure, ratio analysis, another one is a cash flow statement. So 3 chapters they dominated the entire question paper. These are the findings. Basing on this, what are the, how this analysis will support. So what the new concepts we have to learn, the points to be considered. Point to be considered for coming exam. So what the points you have to consider for coming exam means, you try to understand these students. In the chapter, cost of capital is the cost of capital, capital structure, sorry, cost of capital, and at the same time cash flow statement. Another one is a ratio analysis. These chapters exclusively asked this attempt, right? In next attempt, they might not give that much of preference. Of course, if we think, if we are planning like this, means he may make plan like this also, right? It means that how we are analyzing now, our way of analysis also he may consider as a analysis. In such a case, we will have a big slop, right? So that's why instead of concentrating this chapter, you concentrate the remaining chapters. The particularly leverage analysis they could not concentrate it, so might be in coming exam leverage analysis might be the best, right? Leverage analysis they asked, and capital budgeting just they asked with theory questions, so there might be chance to ask a problematic. And working capital management hardly asked theory this time, 2 marks. Next time they may ask a problematic. Coming to dividend decision, they could not make that much of impressive in these chapters, you identify here. And at the same time cash flow concentrated, that's why next time funds flow statement you concentrate on this. So leverage, capital budgeting, working capital management, dividend decision, funds flow statement, what not, capital structure. Capital structure, you concentrate on these chapters, dear students, both theory as well as problematic. Okay, theory as well as problematic. These are nothing but after making these observations, these findings, then we can concentrate this. So not only problematic but also theory part, and at the same time concentrate conceptual clarity you might have to develop, because you see the small concept, aging schedule question they asked, what is the acid test ratio standard they asked, and at the same time financial break even point, indifference point, EPS is 0 they asked. But generally we used to calculate how to calculate indifference point, how to calculate what is that financial break even point, we used to find it out. But instead of asking that, they specifically analyze this one. Okay, so with this we can make our analysis that next these are the questions they covered, because dear students, I cannot explain the answers because the time period is very less. However, you have a solutions with you, right? You can practice. My ultimate objective is how the question been asking. At the same time, what the analysis we can make from this given question paper, what the analysis we can extract, and with respect to the coming question paper, how to modify our preparation. This is my observation, my analysis, dear students. For here I gave my findings, right? My findings, and at the same time for the coming exams you concentrate these chapters effectively, productively. Certainly it will get best judgments.